Well, a couple things to mention here. The first is that we should remember that these are very stale data. So this PPI was for October and November, not for December, in the same way that yesterday's CPI was. And this retail sales was for November, not for December. So we're still, although we're caught up on the tier one data, the unemployment rate or employment report and CPI, most of the data, including everything that came out today, is still about a month lagged. I think this is not really much of a game changer, but we will see on data sets that are subject to revision probably more than normal because the BLS is still, and other statistical agencies, still catching up.
Dr. Seif, it's showbiz. You never say that on air. You say, oh my word, this is just amazing. That's how we keep the ratings going. Lexus Futures, negative 26. Alexis with Dr. Seif.
Yeah, this is not going to move the needle for the Federal Reserve. The fact that inflation came in, I guess, at the wholesale level, a little bit hotter than expected.
Yeah, I think that looking at PPI, we really have to, and I can't do it just looking at the screen quickly here, separate out the components that are going into PCE, which is what the Fed really cares about as its inflation measure. But of course, for December's data, we're still several weeks away from getting that, and so. It's hard to see this moving the needle for a January or even March.
I have like 1 minute here for an intelligent answer on the president's tweet this morning of 5% real GDP. Everybody knows it's a fiction. There's gold involved, this, that, and the other. What's your run rate real GDP right now that you would advise President Trump on?
Well, first of all, for 2026, we have a 3.1% growth forecast right now, and that has really surprised us how the data have come in. But, we had a great Q3. Looks like Q4 is going to be almost as strong. And then a bunch of stimulus is hitting in Q1 of this year. It's hard to believe that the U.S. economy's trend growth rate is really above 2 at this point. And so we think that this is a real burst to the upside that the U.S. is having, likely to stick around through the middle part of this year. And then things are likely to come more down to earth, although we see above trend growth persisting through 2027 at this point.